Since reporting earnings on Tuesday, Amazon stock has gained about 5%, taking the company's market value to $1.92 trillion. With $73 billion of cash on its balance sheet, $13 billion of investments, and $58 billion of long-term debt, the enterprise value is $1.89 trillion. Revenue over the last 12 months comes to just under $600 billion, with $38 billion of net income and $46 billion of free cash flow. So Amazon stock is now valued at 3.2 times revenue, 51 times earnings, and 41 times free cash flow. This was another impressive report from Amazon. Revenue from online stores grew 7% and physical stores grew 6%. Third-party seller services increased 16%. Advertising grew 24%. Subscription revenue grew 11% and AWS climbed 17%. A focus on profitability helped overall operating margins climb to a new record of 8%, and free cash flow continues to ramp higher, and that's despite significant capital investments into GPUs and AI infrastructure. A key contributor to Amazon's strong performance is the cloud service AWS. Not only did AWS grow 17% year over year, operating margins for the business climbed to 38%. CEO Andy Jassy said last year that AWS would improve, and it turns out he was right all along. Advertising was another bright spot. Trailing 12-month revenues for that segment are now up to $49 billion, and Amazon's other bets also grew 23%. So Amazon continues to move forward. The question is, what price should investors pay for this collection of businesses? Let's assume that online stores and physical stores grow 3% a year for the next 5 years, hitting almost $300 billion of sales. Let's assume third-party services and subscriptions grow 12% per year and advertising and AWS grow 15% per year. In that scenario, Amazon would be making around $912 billion in total revenue in 5 years' time. Amazon segments have different profit margins, so they should be valued differently. Here you can see I've applied a 1 times multiple to online and physical stores, 3 times multiple to third-party services, advertising and subscriptions, and an 8 times multiple to AWS, which is the most profitable segment. Add up those totals and we get a potential market value in 5 years' time of just under $3.1 trillion. Assume some buybacks and the annualized return works out to about 10% per year. So Amazon, despite its size, can still deliver a good return, and there appears to be no reason at all to be bearish on the stock. But these are my personal opinions, not financial advice, and I do hold shares in Amazon. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.